Hi everyone, I hope you're all doing well, and today we're going to be talking about Dark Group, or also better known as Jet2. And I've always talked about Jet2 on the channel, or Dark Group on the channel, and I've always mentioned it partly in 3 stocks to buy or 5 UK stocks to buy. I've never actually given Dark Group its own video, so I felt like it was deserving of having its own video and going into the company a little bit more detail today than what I do on them videos. So I'm going to do that for you guys today. And if you can smash that like button, if we can try to get to about 100 likes, that would be absolutely amazing. I know a few of you guys are asking me to do some other airlines as well. I will try and get around to doing some of the airlines. If you want to comment down below and let me know which one you would prefer me to do, then that would be ideal. I know that a lot of you guys have been asking me to do National Express as well, and I will try to do National Express this week as well, because I know a lot of you guys have been asking me about that one as well, so that will be happening at some point. I'm also going to be doing some house builders as well, so I'll be looking at the best UK house builders. As you know, I already own Barratt Developments, but this week I'm actually looking at potentially buying a second house builder and add it into the portfolio. So I will be comparing house builders as well at some point this week. I'm actually probably going to do it this weekend, and I'll probably be talking about it on the private patrons group and also on the Discord group. So if you want to join that, so you want to know a little bit earlier which one that will be, the link's in the description below. But anyway, what we'll do now is we'll get stuck into Dark Group or Jet2, and I'll talk about if it's a good opportunity to go buy that stock right now. So Dark Group is basically known as Jet2. It's an airline, and it's kind of one of those cheaper budget airlines, and we'll be talking a lot more about the company itself a little bit later in the video. What we'll do first is we'll go through some of the fundamentals of this company. We'll talk about some of the financials, and then we'll get on to the actual company and why is it such a good company. So first of all, I am going to say one thing I would say that this company could do is maybe change the company name from Dark Group to actually just Jet2 now. I just think it would make more sense to just be completely known as Jet2, but that's kind of only a little negative. But the actual ticker symbol for this one is DTG, and it is on the AIM, which is kind of like the smaller exchange, not the FTSE. It's currently trading at about £8.40. It might have gone up slightly since I've recorded it or wrote down a lot of my notes for this video. And it was originally trading at £19.35, and this was back at about the 17th of February, just before this kind of COVID-19 kind of kicked off absolutely massive. The stock was doing absolutely fantastic. It was on a great run. Company was going absolutely strong, and yeah, because of the COVID-19, airlines in general have completely gone down, and this is one of the same kind of scenario. It's an airline that's been absolutely hurt, obviously operating not as much. And it's caused the share price to, over half right now, which is a massive drop in the share price. So we basically talk about getting the company at half the price it was only within 4 months ago. It's on about a 55% discount right now. On Super Wall Street, this is currently valued as being about fair, 2.8% undervalued, I think it is. But it's pretty much flat. It's pretty much saying it's the right price for this company. And in general, when I get onto this company a little bit later on, I believe that this forecast is wrong. I believe it is massively undervalued. I think what they're doing is they're not incorporating the growth as what it will be. In my opinion, the growth will be a lot stronger than what Simply Wall Street has it at. And that's why I believe the stock's undervalued at these prices compared to their valuation. But I always throw the valuation of Simply Wall Street in there. I'm just kind of saying from my opinion. I think from their valuation, I don't think they've got the growth exactly right in my opinion. But that's Simply Wall Street's kind of view, and obviously this is my kind of view of the company. The P ratio is 8, so obviously the P ratio is saying that this company is pretty cheap. Now airlines actually do trade at a lower P ratio generally. So we're not expecting this company to go, oh, it's normally a 30 P ratio and it's down at 8. It's nothing like that. The P ratios hardly break into the 20s. For airlines, that is. So a P ratio of 8 is saying that it is cheap, not extremely cheap, but it is cheap at these sort of prices right now. When we look at the growth, we'll start off with the future growth. The future growth is kind of going to be a little bit sluggish, slow to get back to where it was the year before when it had a fantastic year. Now, from my kind of view, I think that forecast is totally wrong. I think that this year obviously isn't going to be a great year. 2021 will be pretty close to where it was in the year just gone, and I believe that the 2022 will be better than what the 2019 was. So in my opinion, I see growth being a lot better than this when I get onto some of the reasons later on. So I think the growth is forecast to be slightly wrong. I think it'll be better than what it is. when we look at the past growth, this kind of backs up my theory as well. You look at what the company's done in the previous growth, and the growth's been absolutely explosive on the company. Earnings wise, it's very hard to get an airline that grows profitability, and this company does it fantastic. Revenue as well. A lot of airlines grow revenue, but not at the rate that what Jet2 has been doing over the last few years. So the growth past wise is fantastic, and this kind of backs up my theory. Like the company's previously done it, so it's not I'm not saying like it's going to come from nowhere. You look at the growth looks pretty good previously, and I believe it'll be fantastic going forward. Balance sheet wise, not too bad. Obviously airlines are generally not amazingly do have amazing balance sheets, just because of buying airplanes isn't a cheap business. It's an expensive business buying a lot of airplanes. So a lot of airline companies do tend to have a lot of debt on it because of the airplanes they do buy. But when you look at this sort of company, it has 1.7 billion in cash and 980 million in debt. Now the balance sheet figures here are taken from COVID-19, so obviously the debt could potentially be a little bit higher. The cash could be slightly lower because it probably burnt through its cash a little bit. But going into this COVID-19, it was in a great position. You got cash double to what the debt is, which is absolutely fantastic. I mean, at some point, maybe the company even thought about paying some of this debt off to get that down with that cash pile. It's also sold part of its business, which we'll talk on in a little bit. So the cash has been raised slightly as well, but obviously that's been raised, but at the same time it might have come down because of the COVID-19. But at least we know going into COVID-19, this company had double cash to debt, which is absolutely fantastic position to be in. I like looking at insiders and what's going in the insiders. So there's not a huge amount of insiders buying. Recently, the CFO, they bought shares, which is great. That's someone that's in power of how the company's doing financially wise, and if they're willing to, they're in probably the better position. Probably level with the CEO about how the company's doing, and if they're buying a little bit of confidence there. Obviously they weren't buying huge, but they did buy, which is a positive sign, as well as another insider. Now it looks kind of small on this graph due to the sales because of the CEO. So Philip Meeson is the CEO of Dark Group, and basically he was selling a lot of shares, but this was pre-COVID-19, and also the stock had been on a pretty good run, so it does kind of make sense for the CEO to kind of go, look, the stock's on a good run, I have a lot of shares, let me take some profit. Also, as well as that, the CEO, Philip Meeson, he is, I think, 72 right now, so obviously normally, the retirement age is 65. So with the CEO, Philip Meeson, with him being 72, maybe he's kind of thinking, I want a bit of cash there, I'm retiring soon. Obviously take some profit, treat yourself. So I think there could be a CEO change at some point with the age of Philip Meeson, but he has done a fantastic job with the company. Probably one of the best UK CEOs of what he's done to Dark Group. It's been a fantastic run for the company over the last 10 years. So we'll see what happens there. But overall, I think the insiders, I'm totally fine with that, with what Philip Meeson was doing, selling his shares in general. So the company itself is obviously known as a low-cost budget airline, package holidays, single flights, very flexible on when you fly out, when you fly back, which is something that, you're not restricted to your 4-day holidays, your 7-day holidays. You can kind of price it around to where you want it, which is a great thing with this company. Obviously, budget airlines have a bit of a bad rep. You look at Ryanair, the customer service side of it. You quite often hear a bad rep about companies like Ryanair, for example. But this company's done really well because obviously you've got your flights, you've got your package holidays, but even your package holidays, great customer service. You never see an empty Jet2 plane. What they also include is the baggage. So normally with a lot of these budget airlines, a lot of these extras you have to pay more for. With Jet2, it's all included. And yeah, it focuses a lot on European destinations, and I use Jet2 all the time personally, and I think it's a great company. I think it's one that I would prefer to use over a lot of other airlines, and there's not normally a lot of loyalty in airlines because of you're kind of going, right, who's the cheapest on that date. But I think a few people, and generally myself, is if I look at Jet2 and Jet2 is about the same price or maybe a little bit more than what other airlines are, like a Ryanair, for example, I will choose Jet2 over them because I think they're a better airline. And I think generally a lot of people just fly with Jet2 because of how easy no hidden fees, the customer service side of it's a great company, and I think that loyalty has been shown over the past few years with the revenue and the earnings increase. Now, to make the company even more robust and to make sure they keep the costs down, as well as that, they have just extended to 100 airplanes now. So obviously that gives them a great ability to go to more locations, have more flights more often. And you look at a lot of airlines that have been struggling right now, like Thomas Cook, and this company has done absolutely fantastic. It's just offering more and more flights. What it does, it uses the same type of aircraft. So basically, when you do like your training with like pilots and people that are just generally working on the plane, it's just the one training that they have to do, because it's the same type of plane. So they know the seating plan, they know the emergency procedures, the packaging the planes, or putting the passes on the planes, if that's the correct way to say it. Putting all the the baggage on the planes, it is all the same way. So there's a lot less training that needs to be put into place. A lot easier to maintain as well, because it's the same sort of aircraft. So with it being the same aircraft, that puts it in a very good place as well. And when you actually look at the platform itself, they've got an online platform, which in my opinion is probably one of the best online platforms out there. It's very easy to search for the holidays you want to do. And I think the online platform is fantastic, very easy to get around, very easy to show the prices. So yeah, the online platform's absolutely amazing. It also still uses travel agents as well, so it kind of gets best of both worlds. The younger generation that wants to search online, I'd say maybe the older generation like to use the travel agents. Sorry if I got that the wrong way around and I've just offended someone, but that's kind of what I kind of think. But yeah, so it's got kind of best of both worlds overall. That's what I'm trying to say. And it is kind of looking to expand now. Can it now go to more like places that are a bit more Christmas themed when it's the winter time and the flights kind of die down? It's looking at more long haul options. I know it's been eyeing up in New York a couple of times. I'd be a little bit wary about that one, just because of like the competition that's there. And Jet2 planes, they're okay, but I don't know if you want to go on a Jet2 plane to New York, just because it's they could look at the option of having TV screens in there. Leg room wise, they're not too bad planes that they use, but I think that you would want to have one of those TVs in the seats if you are going to go to New York. But they are looking at a long haul flight, should I say? But I would be slightly wary about it. That's probably only one of the little red flags I do have about this company. But overall, it's kind of dominating that European airline industry right now. So it's fantastic from that point of view. Just a little add-on in there, it did have a small logistics company which was called Fowler Welch, but it has just sold that, and it sold that for 100 million cash. So that was what I was talking about earlier on the balance sheet. It's just had another 100 million cash put on that balance sheet from where it was, which is fantastic. And the company that they did sell, it wasn't a company that was doing amazing. I think revenue was like decreasing slightly, profitability was increasing slightly, so it wasn't a huge part of the company. I think the whole reason they sold it off was just to get that cash, and then it can focus on Jet2 and Jet2 holidays, which I totally agree with. That's the core of the business. That's where the future is. And I think get that cash in, especially at a time like this, it's a great move in my opinion. So that helps the balance sheet as well. Overall, that's my opinion with Jet2 or DAT Group. And it's a company that's doing fantastic. It's a company that's been very successful, and it looks like it'll carry on being successful. The more flights, the more airports it operates from, the more destinations it has. It's been fantastically run, and for me, when you consider this company sold off and it's dropped half the share price in like 3 months, I think it's an absolute bargain at these prices, and that's why I personally buy DAT Group, and I think it will do really well over the next few years. You just look at what it's done profitability wise and how other airlines struggle to grow profitability, and this profitability on this company has absolutely exploded. So I'm a big fan of DAT Group, and I think it will do really well over the next few years. And in my opinion, it's a company that I want to hold for probably about 3 years, and over them 3 years I expect to make a over 100% return on my investment, in my opinion. And that's why I invest in DAT Group, guys. And I hope you enjoyed the video. I hope you learned something new, and if you can smash that like button, that'd be absolutely amazing. Subscribe if you haven't, and I'll see you in the next video.